to today's morning report chart analysis videos on Wednesday 28th of February with me, Richard Perry, market analyst at Hantec Markets. We had a significant shift in sentiment following on from that testimony from Jerome Powell. We have seen the dollar, which has recovered again, sharply recovered, and it's now testing the highs, 90 spot 56 on that dollar index. That is a key level, clearly. That's the February high. And the dollar index is testing that. Is that a key level on a longer term basis? No, it isn't. The market has been sort of trending lower, hasn't it? As you can see here, for throughout the past year. And that downtrend currently comes in around, let me just change that colour to red. Downtrend currently comes in around 92 area on that dollar index. So there is still room for this to be just an unwinding move, really, within the downtrend. And I think this is basically what it's playing out to be. Yeah, it might sort of form a little bit of a near-term breakout, but there is overhead supply, considerable overhead supply from Q3 last year that I think is going to contain any rally. But for now, near term, the dollar has picked up on the back of these comments from Powell. Powell suggested that inflation was picking up. It suggested wages were picking up. Subsequently, the market is now factoring in factoring in pretty much 3 guaranteed, possibly even now having to move to 4 hikes this year. But I think it's just a near-term blip and a near-term move for the dollar. I think ultimately the dollar remains under pressure. I mean, you had the Atlanta Fed GDP Now forecast suggesting that Nowcast suggested that Q1 growth was around about 2.6%, which is still not all that amazing. It's good. It is good, but not amazing. Considering inflation picking up, you'd want to see that growth data stronger, really, to justify the stronger yields on the basis of strength of the economy rather than inflation driving the move. So I don't think you're going to see too much inflation. You're not going to see too much dollar strength on this move. You might see a little bit of a pickup, but I think ultimately it's going to be sold into. You did see yields picking up. Again, the 10-year back higher, but not massively decisively. You got inflation for the PCE, core PCE tomorrow, and that'll be the big focus for dollar traders. You've got today, though, you've got the Eurozone inflation, and that is at 10 o'clock. Now, that is a key factor, I think, for the markets as well, that they will be looking out for. Let's scroll down here to 10 o'clock. Eurozone flash inflation data, 1.2% on the headline, down to 1.0% on the core is the expectation there. For some reason, that get that going. That Reuters data is not actually correct for some reason. I don't know why. Anyway, so that's what we're looking out for today. But also we've got some other data points. You've got the US prelim GDP, second reading of GDP for the States, expected again to be sort of revised down slightly to 2.5% from 2.6 on the advanced reading. And then you got the pending home sales expected to grow by 0.3%, and then EIA crude oil inventory is expected to show another build of 2.8 million barrels. But this dollar rally is interesting today because it is still playing out, but it's not sort of decisively moving yet, really. Show you on the board. You've got stronger against the euro. Yes, sterling basically flat. The yen is stronger. And that's we've had Chinese manufacturing PMIs data out overnight, and they disappointed. So that's sort of driven a little bit of safe haven moves, and you're seeing gold sort of holding up as well. Equity markets down after we saw a sharp move to the downside on Wall Street. But again, not a massive move to the downside, interestingly enough. But yeah, the markets are still sort of factoring in this Powell move, and you got inflation data for the US tomorrow. Now, the Kiwi dollar is my chart of the day. Now, Kiwi dollar has been in this trend higher in recent months, but it's now corrected back and broken that uptrend. Yesterday's big, strong bear candle decisively broke that uptrend, and is now forming a new downtrend, interestingly enough. And its market is continuing lower today. Now, 71.75 is his key February low. That is a big support there, because if it breaks to the downside, that completes a double top. And you've got these momentum indicators which are corrective on a near-term basis. MACD line is still above neutral though. RSI is still above 40, so they are still corrective near term, but are they going to sort of break down below 71.75? That is a key level of support, as I said, and a breach of that would sort of mark a shift, I think, in sentiment. But it hasn't yet been done, but it looks like we're going to get a test of that move. Hourly chart shows lower highs, lower lows, rallies being sold into. Although not massively decisive negative on the momentum indicators, but there is overhead supply now, sort of between that low at 72.70 to 72, 80, where is it? 72.95 area. So resistance overhead, but yeah, it looks like the market is sort of tracking lower, and a test of 71.75 could well be seen now. So I wish you good luck in your trading today, and I'll speak to you later.